Hello traders, you're welcome to this video. In this video we are going to be looking at the 52-week high trading strategy. Okay, so the 52-week high is the highest price at which an asset has traded over the past year. That's 52 weeks. 52 weeks make a year, so on average. This strategy basically analyzes the highest point that an asset reached within a year. It's often used by traders and investors to gauge market sentiment, price trend, and identify potential breakout points for future trades. So we're just going to be breaking down the strategy for a better understanding. Okay, so like I said already, the 52-week high represents the peak price level an asset has reached within the last year. For example, if an asset's highest price in the last 52 weeks is okay, let's just use this one so that we can get to round figures. The Euro USD will be having 1 point and all of that. So let's use oil, for example. Okay, all right. Okay, let's take for example within the last year. This is October, right? Let's date back to October 2023, and we can see that this was October 2023. Okay, this. So we have our 52-week high at 77.87. Okay, sorry, that was a mistake. Our 52-week high, just look below here, you would see the high price. So the high price is 90.86. The high price in this case is 90.86. Okay, now that is our 52-week high. Okay, this data point helps traders see how current prices compare to the asset's historical performance. Now, why is this important? One, for momentum indicator, a stock reaching or an asset reaching its or nearing its 52-week high can signal strength. However, in this case, the asset, being the US oil, is far from its 52-week high. Okay, but an asset reaching its 52-week high can signal strength and upward momentum. Traders often view this as a sign that the asset could continue to rise. Now, in terms of market sentiment, it reflects investor confidence. If the price breaks past the 52-week high, it suggests that buyers are still interested, potentially driving the price even higher. Now, in terms of psychological levels, traders and investors tend to focus on round numbers and previous highs. Okay, so once an asset hits or exceeds its 52-week high, more participants may enter the market, creating a self-fulfilling price movement. Okay, creating a self-fulfilling price movement. How do you use the 52-week high in trading decisions? You can use it for breakout strategy. Many traders use the 52-week high as a breakout signal, just like we have here now. If price breaks above this 52-week high, you can enter a buy trade. Okay. If the asset breaks above its previous high with strong volume, it may indicate a continuation of the trend, prompting buy orders. Now, in terms of support and resistance, the 52-week high can act as a resistance level. When an asset breaks through this level, it could transform into a new support point, helping traders plan their entry and exit points. Okay, and then you can also combine 52-week high with indicators like volume. Let's just add on the volume indicator. Can combine it with indicators like volume, moving averages. Just add on the 50. moving averages, or since this is a it's a long term something, just make it 200, right? And we can also combine it with indicator like the RSI. Okay, all these additional confirmations are just all these additional indicators are just to confirm the strength of the breakout. For example, we can see that this 200 EMA is serving as a support. The price of the asset is far from its 52-week high though in this scenario. However, had it been that the price was close to the 52-week high, the moving average could have served as a dynamic support and resistance level, which it is serving as. Okay, so we'll have known whether price was maybe the momentum was quite strong. If we had a breakout, that's just going to be a hypothetical situation now because the price is actually far from its 52-week high. And then we can also look at the volume indicators to know if there was a surge in volume, when the price began to approach the 52-week high or when it broke out of the resistance level formed from the 52-week high. And then the RSI also, we can be watching out for the RSI being above the 50 level but below the 70 level. So all these are just additional confirmations. Okay, all right. Now, key points to remember is that not every 52-week high is a buy signal. Okay, price might retrace or consolidate before continuing upward, and then it's important that you always wait for confirmation. Don't just enter because an asset hits a new high. Look for sustained buying pressure and volume before committing. Okay, now by understanding and using the 52-week high strategy, traders can capitalize on strong market trends while managing risk efficiently. Now let us just look at another example with the gold. Okay, remember the example we just looked at now is US oil. This one was far away from its 52-week high, but gold actually formed a new high. And when it crossed, let us see, this is we are in October 2024. So let's look for October 2023. Okay, and we are going to see that when this 52-week high was broken, can we see the 52-week high should be around 2009.43. Can look at it there, 2009.43. So we can see that when this 52-week high was broken, it was a very important resistance level. And you can see after it was broken, there was some consolidation before the price began to boost forward. And we can see how the price rallied all the way up, and it seems like the rally is not even over yet. So you can see how important this 52-week high level can be, right? So we can see that after this level was broken, you can see a huge rally that we had, which is still ongoing up till now in gold. Okay, so the 52-week high level is actually an important level, but it doesn't mean that you will always have a rally after it is broken. There are cases when you might see a consolidation and maybe the resistance will hold, while in some other cases the resistance might get broken. Okay, so you might just want to make sure that you get confirmation before making any trade decisions. So I hope you found this video insightful. Kindly like and subscribe for more trading insights. Cheers and happy trading.